Ladies and gentlemen, thank you for being here today. I'd like to take you on a journey into the world of artificial intelligence, what it promises, what it risks, how the markets are reacting, and how that touches every one of us. We live in an age where words like AI revolution and machine learning breakthrough drop into our lives almost daily. We hear about companies building smarter systems, chip makers ramping up production, and investors racing to front-run the next big leap. Indeed, the boom in AI has helped push technology firms to valuations once unimaginable. Reuters. Consider the semiconductor industry. At one point recently, global chip stocks plunged, wiping out roughly $500 billion in valuation in just a short span, not because the technology disappeared, but because investors began questioning whether the growth matched the hype. The Economic Times. So today I want to talk about 4 key themes: the promise of AI, the reality check the markets are giving us, how business and society must adapt, and what each of us should keep in mind moving forward. First, the promise of AI. Think of what's possible. Smarter health diagnostic tools, faster drug discovery, predictive maintenance in factories, personalized education, autonomous vehicles. The list goes on. The potential economic and social uplift is real. Companies have responded accordingly. Major tech firms are spending billions on AI infrastructure because they believe the payoff will be massive. Reuters. Those bets explain why chip makers and AI hardware firms surged in valuation earlier this year. Investors were placing forward bets, believing that the demand for AI computing power would continue to climb, that data centers would proliferate, and that every device would become smart. Second, the reality check. Because when the markets step back, they do so for a reason. As one article notes, selling pressure trimmed roughly $500 billion in combined market capitalization on concern over lofty valuations for some of the artificial intelligence boom's biggest winners. The Economic Times. In other words, the rally was built on expectations, and now some investors are questioning how sustainable those expectations are. If a company is spending heavily on AI, but the revenue growth or margin improvement isn't immediate, then the valuation becomes harder to justify. If interest rates stay higher for longer, the cost of capital is higher, and that puts pressure on growth stocks. Bloomberg. What does this mean in practice? It means we're in a period of reassessment. Where once the narrative was AI equals unstoppable growth, now it's more nuanced, AI equals promising growth, but with caveats. For example, if chip makers build for exponential demand but demand grows more slowly, their margin might contract. If the infrastructure costs are massive, the ROI might be slower than ideal. Third, how business and society must adapt. For businesses, this means aligning expectations with execution. It means not just promising AI but delivering AI in ways that scale, integrate, and actually benefit customers or operations. For technology vendors and infrastructure providers, it means being realistic about how fast adoption happens. For investors, it means understanding that with big opportunity comes big risk, particularly when valuations are already elevated. For society, it means considering the implications: workforce shifts, ethical concerns, data privacy, bias in algorithms, and the question of who benefits. AI will touch education, healthcare, transport, manufacturing, all sectors. Ensuring broad benefit rather than unequal gain is a challenge. Fourth, what this means for you and me. Whether you're a business owner, a professional, a student, an investor, or simply a worker in the new economy, here are some takeaways. Stay informed. Understand that hype is not the same as proof. Recognize the difference between companies that simply say they are doing AI and those that show measurable results. Be adaptive. If AI is reshaping your field, whether marketing, logistics, finance, law, healthcare, consider what skills and tools will keep you relevant. Be cautious. If you're investing in companies riding the AI wave, make sure you understand the business model, the cost structure, the competitive landscape. Be ethical and thoughtful. Because as we adopt powerful tools, the decisions made today matter for tomorrow. Bias, misuse, privacy breaches, job disruption, these are not just theories, they are realities to prepare for. Now let me circle back to the markets for a moment. It's quite telling that during the recent dip in tech and chip stocks, much of the concern stemmed from AI-related stocks being overvalued relative to their anticipated performance. A key measure, the Philadelphia Semiconductor Index, which is trading near 28 times estimated forward earnings, compared with its 5-year average of less than 22 times. Mint. That gap between expectation and performance is what we call valuation risk. It doesn't mean the technology fails. It means that growth might be slower or more incremental than previously thought, and that markets are resetting for that possibility. Inasmuch as AI remains a powerful force, its implementation is not without friction. Data bottlenecks, algorithmic limitations, talent shortages, regulatory hurdles, these all remain. Furthermore, from a macroeconomic perspective, if interest rates remain elevated, the cost of executing large-scale AI projects increases. If the global economy slows, the budget for innovation may tighten. Let's also talk about the psychology of this moment. When companies and investors believe strongly in a trend, momentum builds. But momentum without fundamentals can lead to excess. In this environment, some of the best-performing stocks may also be the most vulnerable to a shift in sentiment. The current sell-off isn't a statement that AI is dead, far from it, but it is a statement that the pace of expectation is being reconsidered. Now, where do we go from here? I believe we should watch 3 front lines. Execution. Which companies can translate AI investment into real revenue, margin, and sustainable advantage? Infrastructure. How are the hardware, chip, data center, networking companies managing costs, supply chains, and demand cycles? Regulation and ethics. As governments and regulators engage with AI more deeply, how will rules shape deployment? How will companies handle privacy, fairness, transparency? As we watch these unfold, it is also wise to adopt a mindset of growth with grounding. Celebrate the potential, but don't ignore the practicalities. Recognize that transformation takes time. Recognize that not every company in the AI space will win. Recognize that competition is fierce. In closing, we are standing at the threshold of incredible change. AI will reshape industries, economies, societies, much like electricity or the internet did. But the magnitude of change should not be confused with the immediacy of return. We must walk into this future with ambition and realism in equal measure. As individuals, we must prepare ourselves, lifelong learning, adaptability, ethical awareness. As organizations, we must execute thoughtfully, invest wisely, deliver responsibly. And as a society, we must steer the direction of this technology toward inclusive benefit, not just headline growth. So let us move forward with eyes open, excited for the promise, clear about the challenges, ready for the long game. Thank you.